does that suggest for investors?
Well, we are winding down this expansion, and the financial problems and troubles that we see now are part and parcel of every business expansion as we get to the end. What most people don't realize is that all this financial trouble does get back into the real economy, which looks very healthy at this time, and with lags, that brings the economy down. So I think investors have no choice but to be very cautious in terms of fixed income and equity investments, to be more in cash, and to look and hope for some relief out of Washington, or relief in the form of a slowdown in the economy without it recessing, or relief on the inflation front.
I don't know why they call it the dismal science. Let's let you talk to our sunshine boys, starting with Martin Zweig.
Alan, of course, interest rates have been up here in the United States this year. They've also gone up in Japan and Germany.
Yeah.
Would this have any effect on our dollar? Or will it have?
Well, the dollar is getting help from the higher interest rates. But because the dollar stays higher, our trade deficit doesn't get help. And we're stuck. Trade deficit doesn't get better. We still have a lot of financing overseas to do,
right,
and that tends to push interest rates up. Those deficits and the financing of them, I think, are really what are keeping interest rates so high relative to inflation. It's a mistake to think that inflation is the key to interest rates. It's those deficits.
Okay.
Well, interest rates seem to be on everyone's minds, so a related question. With the real interest rate on the bonds at the high level that it is on a historical basis right now, would you expect the bond market to show better performance in the coming months than it has to date?
Well, we will surely have some relief in the bond market. I think the next 2 or 3 weeks could be more of a problem because there is a major Treasury refunding the first week of November. It's a little hard to see who will stand up and buy long bonds as we move into and through that refunding, not knowing where interest rates have to go to pay our lenders off, a lot of that foreign investors. Beyond that, the bond market should do better. And we may see 2 or 3 months of a good bond market. But I think on average, unless those other factors I mentioned come about, interest rates are headed up.
Alan, to the extent that the Japanese and the Germans don't seem to be stimulating their economies, in that interest rates are going up, as Marty indicated before, do you think there's a chance that, that we will not support the dollar as aggressively as we have in the past, meaning not push our interest rates up? There's been some discussion recently in the press with regard to that. I'd like to know what your views are.
Well, I think we will not continue to support the dollar through higher interest rates as the initial stage of response to more downward pressure on the dollar, especially since they are raising their interest rates. The Federal Reserve is caught. If they raise interest rates, they are risking the expansion. And so of the choices, it is better to let the dollar go down. I would expect the countries together to try to manage orderly declines in the dollar by successively lowering the trading range for the dollar step by step as the dollar comes under more pressure at specific times.
Alan, all the very real problems you have just cited were in existence 2 weeks ago. The Dow was 400 points higher. Why did it choose this moment to fall?
I think the problem I allude to has existed since May 1986, and first in the fixed income markets when we began to worry about foreign participation and how much we would have to pay to borrow from overseas. But when interest rates reach these levels, then every notch up is a problem for stocks because they are a problem for the pace of the economy, corporate profits, and now the risks of recession in 1988 and the greater risk of recession in 1989 is within the sights of equity market investors, much more so than they were 2 weeks ago, 4 weeks ago,
Alan?
2 months ago.
Yeah. Alan Greenspan said this week the economy was in better shape than people thought. Inflation was not the threat people believed. Jim Baker said this week interest rates are coming down. The trade people emphasized that for 3 quarters now in unit sales, the deficit has been shrinking. Are they all just whistling in the dark?
That is, virtually all of that is an accurate representation of the facts as they exist. But we all know that financial markets look ahead, and I think perhaps they're missing that point.
Do you not think corporate profits will be up next year?
They'll be up, but not nearly at the rate this year. This year, 22, 25%, next year 10 to 15%, and even that 10 to 15% is beginning to fade as a possibility.
Are you at all concerned about the massive declines caused by computer program trading in these markets?
Well, yes, because we have huge swings in the market. But as a matter of philosophy, no, this is a device for securities trading, and I think investors just need to recognize that the moves are magnified by it. But I wouldn't think that they should be changed, outlawed, ruled out, or anything like that. They are a factor which tends to magnify any changes in fundamentals that occur.
You've expressed severe criticism of where we are economically in terms of policy. Are any of the presidential candidates talking more sense in your view?
It's too early, but I don't think any of them are really facing up to the problems of the deficits in a way that looks promising at this time.
What should be done about the deficits?
Well, what I would say is going to be, in theory, correct, I think, but in practice, hardly possible. But we are now at the stage where we need some sort of magical feat in which we cut the budget deficits very substantially, at the same time enlist the aid of the Federal Reserve to offset that restraint through easier monetary policy and lower interest rates. And on top of that, we have to get our trading partners into it to stimulate their economies with lower interest rates at the same time.
Is the answer to get tough with our trading partners, as people suggest?
Oh, I think some of that will be tried.
Will it be successful?
Part of our problem today is a crisis in confidence because in Washington we're having trouble, and we're having trouble dealing with our trading partners.
Well, I have to thank you, Allen Sinai. Thanks for making our spirits even a little bit lower than they were half an hour ago. Thanks, too, to our panel. One or two of you may be right, who knows? And I hope you'll all be back with us again next week when we'll see what's cooking with the food stocks. My guest, June Page, is the leading analyst of the Bettable Edibles, and she'll be sharing her best financial recipes with you and me. So join us for a 5-star evening, and let's hope by then we'll all have more money to pay the bill. Meanwhile, this has been Wall Street Week. I'm Louis Rukeyser. Good night.
Wall Street Week with Louis Rukeyser has been brought to you by public television stations, by Hanson Trust, a $10 billion transatlantic company with 23 consecutive years of growth in earnings and dividends by providing essential goods and services, by Prudential Bache Securities, the investment firm with rock-solid resources that's leading the way to the future for investors, and by Primerica, the new name in financial services and specialty retailing, a company with the resources to fund growth for tomorrow. Primerica, a name to remember.
Stay tuned for Upstairs, Downstairs, next here on Channel 17, TV worth watching.
For a printed transcript of this program, send $3 to Transcripts. Wall Street Week, Owings Mills, Maryland, 21117. That's $3 to Transcripts. Wall Street Week, Owings Mills, Maryland, 21117. Maryland residents, please add 15 cents sales tax. Wall Street Week transcripts are also available to subscribers of the Dow Jones News Retrieval Service. Wall Street Week with Louis Rukeyser is produced by Maryland Public Television, which is solely responsible for its content.
Next time, nature turns...
American painters such as Childe Hassam, George Inness, and Robert Henry were held. As it turned out, Cornelius Sage had a flair for the theatric as well as the artistic, and important talents from the performing arts soon found their way to the gallery.